Buyers are back. Buyers are back. Yeah, put a song in our head. But we've been seeing mortgage purchase applications up for the last 2 weeks. So I want to focus this time just on our buyers, just on first-time home buyers and the opportunities that they have today. In fact, even more than we've ever had before. And let's be honest, first-time home buyers were priced out of the market for years, then they were feared out of the market, and they finally have their opportunity, but I'm afraid that with all this demand coming back so early, and with new listings not keeping up, we're going to see another strain on inventory, creating an environment where we're going to see multiple bids, raising the prices, supporting home prices, and home price appreciation. So this is something that we're going to continue to watch as the year progresses. But right now, interest rates have somewhat stabilized. Are they super low? Not yet, but stable enough that buyers can get in knowing that they can purchase today and refinance 6 to 12 months from now when interest rates do drop. So let's go through some of the options that a buyer has in today's market to maximize their ability to get into a home, putting the least amount down, as well as maximizing their affordability. So here's some things. So with buyers coming back, they want to know, how do I get in? And sometimes they feel threatened that they have to keep renting because their credit scores are low. Well, not only do we have an in-house credit repair, but we have programs available that you can still have a 580 credit score or even lower using an FHA loan. An FHA loan allows you to put as little as 3.5% down. You can also partner it with a down payment assistance. But that FHA loan, which is government-backed, is a fantastic opportunity for first-time homebuyers to get in. Because not only can you have a low credit score, and here at OneTrust we have no overlays on that, and FHA actually doesn't have a minimum credit score. They just require that if you have below a 580, you're going to have some compensating factors, and it's an overall file quality that we're looking at. But they also allow a debt-to-income ratio of up to, I've seen it go as high as 58%. A 58% debt-to-income ratio on a monthly basis is a massive win for first-time homebuyers trying to keep up with the home prices today. And then, of course, when you refinance, it's going to drop that monthly payment back into what is a sustainable range. And also remember, there might be spouses or roommates or other people living in the home that we either are choosing not to include on the loan, or because of a better interest rate, or maybe they haven't been working long, or maybe you just simply don't want them on the loan, but you know their income is going to help you support that monthly payment. That's a great reason to use that higher debt to income ratio on FHA, knowing you have the coverage for that monthly payment. So we also have VA and USDA, zero money down. Now VA, of course, thank you to everyone who has served our country, whether it's reserves or active military, you have the opportunity to get into a loan with no money down. And then if you get seller concessions to pay for your closing costs, you can actually get to the closing table and get your earnest money back. USDA is a rural-based loan requiring you to live outside of the metro area. But I don't know if you've checked out some of the neighborhood sprawl that's happening right now, but it is going super far north as well as east and south. And if that's the case, and you could choose one of the rural areas that work for you and your family, you have the opportunity to purchase a single-family home with no money down. Now let's talk about conventional loan options. You could put as little as 3% down. Of course, partnered with down payment assistance. Again, I'm going to talk about that in just a minute. But you could put as little as 3% down, and if you qualify for the income limits, you can do a home ready or home possible loan and get a reduced interest rate and reduced mortgage insurance. I mean, that is a win-win-win. So with all of those wrapped together, you also have the opportunity to add in a renovation loan. You can do a renovation loan. You're walking into a home. It's not the perfect home, but it happens to be the perfect price to meet your budget. But if you put a little bit of money into it and redid the kitchen and the bathrooms, or added a porch in the backyard, or added another bedroom, it would literally be the perfect home, and maybe even later the perfect rental. You can put as little as 3% down based on a conventional renovation loan. Again, FHA has a renovation loan as well, allowing for those higher debt-to-income ratios, lower credit scores, and 3.5% down. The renovation loan in today's market is really a win because not all the homes, especially with our lower new listings, is the right home for you. But you know that when the spring and summer comes and more demand comes out, you're going to be in a position where you're going to have additional competition raising home prices. Now, if you could get in today in that home that needs some work, and you're able to get the seller to pay for either the rate reduction, your closing costs, or dropping that purchase price, and you can do a renovation loan, then that again is the opportunity for a first-time home buyer to get in with very little down and make it the perfect home. Well, let's talk about the down payment assistance programs, because this is the icing on the cake. And you can use it with the conventional, with FHA, and even with VA. The down payment assistance programs, did you know that there are literally 14 county down payment assistance programs? There are 12 city and 6 statewide. That is not even overlapping. I'm talking about the fact 14, 12, and 6, that is an opportunity to research which is the best down payment assistance for your income, your credit score, and the location of the home that you're buying. All of these opportunities are for you to get in, and some of them even allow for a non-occupant co-borrower. And then, of course, there's the social equity program. If you or one of your descendants lived in one of the red line areas from, I forgot the first year, and I'll put it down in the comments, 1938, 1938 to year 2000, if you lived in one of those red line areas, whether you or one of your descendants, you are eligible for $15,000 or $25,000 depending on your income. I mean, let's face it, if you're renting right now and you have not taken the time to fully explore all of the options you have available to you as a first-time homebuyer, especially with all of the first-time homebuyer specific programs that are coming out right now, and all of the awareness around the Biden administration talking about first-time homebuyer affordability, if you have not talked to a lender lately, you need to. Going into the summer, you have an opportunity. In fact, you have a bigger opportunity right now. But I would tell you, if you're not ready and you need to fix your credit, you need to save some money. Sorry, I'm starting to have hiccups. You need to save some money. You need to put yourself in a position. You need to set yourself up, even if not now, soon. Because this is the opportunity to build real wealth. This is the opportunity to create financial stability. Renting does not give you that. Well, that's a wrap. You guys have a great rest of your day, great rest of your week. Nicole Rueth with the Rueth team. We'll talk to you soon.